WGN, we say hello to our good friend, Mr. Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. Hello, Craig. How are you today?
Oh, John, I am fantastic. Anytime I'm on with you, it's a good day. But in 2025, when I come on and the Dow rips 700 points higher, NASDAQ up 2.5%, S&P up 2% on the day, and I'm reminded that inflation's getting back under control, it's all smiles in the Chicago newsroom.
I'm happy you're so happy, Craig. I read the inflation report, and depending on who I read, were people pulling out the negatives of it or the positives of it. It seems like the market seems to be happy with where it is. Inflation's still obviously higher than maybe we wanted, but signs of continued cooling.
Oh, everyone's still mad about the price of eggs. I am too, but the reality is we may have overdone the inflation fears, at least thus far this year from an investor perspective, and today was about right-setting expectations. We had inflation year over year come lower than we had anticipated. Across the other side of the pond in the UK, they too had better inflation data, and yesterday we got inflation not for you and I as consumers, but inflation for producers, the people who make the stuff that we eventually buy. That ticked lower as well. So what does it all mean? Inflation's finally coming down, thanks in large part that everyone's been waiting for housing and shelter to get cheaper. We just learned today that it might be starting.
Craig, I'm curious. We went from 9% inflation, I think it was June or July of 2022, fairly quickly, relatively speaking, got to near 4% inflation. Why are these last 2% down from 4 to 2 so difficult?
Well, it's football season. It's the playoffs. You can march down the field, but how tough is it to get into the end zone once you're in the red zone? And for those who put the miles on that are running marathons, boy, that last lap, that last sprint, it's the toughest mile. The same thing can be said in finance. Those finite changes that at the end, they always take the most time. It's just that simple.
Yeah. Was the rally today broad, meaning that all the players are getting involved, all the industries, a lot of the stocks, or is this still a story of Magnificent Seven leading the way?
Well, it definitely wasn't just the Mag 7. We kicked off the morning with Jamie Dimon, the president of all banks, in this case J.P. Morgan Chase, putting up good numbers, also supported by many of his competitors. And with the inflation news, we saw the Russell 2000, the S&P 600 small cap stocks perform well, because maybe, just maybe, the Federal Reserve is not completely paused. Maybe there's a chance if we can get future inflation prints, the likes of which we did today, that once we get into July or September, we could reinitiate those rate cuts. So it was broad-based, and that's the enthusiasm contained in my voice.
This will be the last time you and I chat during the Biden administration, which will leave with a very complicated financial legacy and economic legacy. Would you agree with that, Craig, that it is it's a complicated one with the inflation being so high and hurting so many people for years that may cloud some of the good economic news we've had, especially the last couple of years?
It's undeniable that the economic data, it's not too hot, it's not too cold, it's just about right. And everything that surrounds the world of geopolitics and others have clouded that view. In the same way, the previous administration, things were ripping higher, and then COVID came in and clouded that view. Citizens and investors care about results, and leaders and legislatures just have to deal with the deck of cards that they're handled. So I think you provided a very good executive summary, but certainly President Biden went out with a bang. That game changer, that Social Security Fairness Act that was signed on January 5th, which upended legislation that had been on the books for 40 years, that was certainly newsworthy. So out with the old, in with the new. We'll see where we go from here.
What are you looking for in the first couple of weeks of the Trump administration? Is it just continued economic data and it doesn't really matter who's in office at this point, or are there things that he may do, say, that could move markets?
Well, he's got to get all of his appointments through, right? That's happening now. That's part number one, because nothing gets done until you get everyone appointed that you want. And then part number two, it's getting this new Congress together and seeing if this new Congress can coalesce around something very simple and basic, which is the extension of the Tax Cut and Jobs Act. And what I'm paying attention to as a investment advisor, as a fiduciary for all of our clients, is making sure the market continues to believe that the tariff threats are exactly that, threats and negotiating tools, much more so than actual policy, because if they are actual policy, get ready for that VIX, that volatility to spike. Hasn't happened yet, but it could in the opening weeks after inauguration.
That's what I was going to say, is that and that is part what people love about soon-to-be President Trump. The people that love him, they love the unpredictability nature. They see that as a strength. I don't know if the markets feel that way, because the markets tend to bet ahead of the actions, right? Markets tend to bet ahead and see what's happening. And an unpredictable president, which, again, some people see as a strength, some people see as a weakness, can make that game hard to maneuver around, Craig.
Well, you know what? It's not a game. Ultimately, I think what's going to happen is earnings still drive stock prices over the long term.
Right.
But you are so right, John, and that's why everyone loves your show. The market moves relative to expectations. And when you have X, formerly called Twitter, and you have tweets and frequent press conferences that he doesn't avoid, near-term language is going to move markets. And you know what? We've been through it before. We're about to enter into it again, but at least there's a baseline now for investors because of the first term of the Trump administration. This is just act number 2.
Right. So traders don't love the volatility, but investors, we look at the broad length of things. I imagine that's a lot of what you talk about with your team and with your many clients at VestGen Wealth Partners.
We share that with all of our clients because it's about getting retired and staying retired. And that is more than just a strong investment discipline. You also have to embrace VIX and volatility and use that VIX and volatility to trade around positions. But ultimately, it's like all things in life, John. It takes financial planning and a deep commitment to knowing what's important about money to every family that we serve, because that's how you develop sleep at night strategies. And that's what we're about at VestGen Wealth Partners.
Craig, if someone wasn't maybe listening as much during the holidays and they missed that now you're the co-founder and wealth advisor at VestGen Wealth Partners, give us the 30-second pitch about what VestGen Wealth Partners is all about.
We are redefining succession in the industry for those retiring advisors and helping their clients and helping all the clients we serve across the country by bringing together a family office experience for everyone. Because people deserve more than just portfolio management. People need consultative services relative to tax saving strategies, their estate plan, their insurance, their retiree health care. It's family office services coming from what I call Wall Street to Main Street. And when we do that, I think it's inspiring, and it really allows people to worry less, live more, and that's what VestGen Wealth Partners is about.
It's like getting your physical. It's your financial physical. You get to answer all the questions.
That's exactly it. That's what we do, and I think we do it well because the strategies we deploy have been TNT, John, tested in the trenches.
Oh, I love when you drop the TNT. All right, GetRetiredStayRetired.com is where you can go for more. Craig, as always, good to hear from you, and we've started a new winning streak on the markets when you come on. We'll track it as we go. Okay, bud?
You got it, my friend. Be good.
That's Craig Bolanos. GetRetiredStayRetired.com.